Good morning, everyone. Good morning, ladies and gentlemen, and welcome to the highly anticipated webinar. I'm Ogechi Okwara, and I'm thrilled to be your moderator for today's webinar, themed Introducing the Norrenberger Turbo Fund. All right, so before individual and institutional clients, with a team of experienced professionals, insurance, securities trading, and digital banking. Our component companies are authorized and regulated by the Securities and Exchange Commission, the Central Bank of Nigeria, the National Exchange Limited, the National Pencom Commission, and the National Insurance Commission. Now, to the topic at hand, we are here to introduce you our latest offering, the Norrenberger Turbo Fund. This fund will help you attain your new heights. Here with me are my distinguished panelists. We have Ekene Okechukwu, who is the Regional Head of Asset Management for Port Harcourt Division. And we have Todemu Oluwole Oni, who heads the Institutional Sales of Lagos Division. We also have Victor here with us, who is the Portfolio Manager of Asset Management. So if you have any questions during the course of this session, you can drop your questions at the text bar. I will be delighted to answer you. So I'm about to launch a poll. Please do well to engage before we go into the session. All right, I can see responses are already coming in. And the question says, are you considering investing in funds individually or as a large portfolio? So let's see how it plays out. At the end of the poll, we'll give our responses. Okay, so the results are in for the poll, and I can see from the responses, are you considering investing in the funds individually? We have a larger number of people that want to invest in this fund individually. And also for the next question, it says, what's the primary investment goal for considering our mutual funds? And I can see a lot of people went for the option that says wealth growth. Of course, everyone wants to multiply their income and wealth, so I don't expect anything different. All right, thank you for engaging in the poll. We'll be going right into the session immediately. Okay, so in the last week, Norrenberger has done so well in creating or promoting brand awareness as to our Turbo Fund. And we know that in the last 3 years, Norrenberger has launched 3 different funds, and with the addition of the Turbo Fund, I'm sure it's something different from what we have, and I know that we hope to achieve and create maximum satisfaction for our clients. So I would like to, this question goes to Ekene. Ekene, what exactly is the Turbo Fund? Like I said, it's a Turbo Fund and a fixed income mutual fund. So how exactly is it different from the other mutual fund Norrenberger has already?
Thank you, Oge, for that question. To enable our audience actually understand the Norrenberger Togo Fund, I would like to first of all take a step back to explain what a mutual fund actually is. A mutual fund is actually an investment option that enables the fund manager to pull funds from multiple investors and then invest or devote that fund into various financial instruments. This includes treasury bills, bonds, stock, commercial papers, and many more that are being sanctioned by SEC. The goal of the mutual fund is majorly to drive diversification, liquidity, improve return on investments, and of course, professional portfolio management. Now that brings me down to the Turbo Fund we are actually introducing today. What is the Turbo Fund? The Turbo Fund is actually a variant of the mutual fund investment. It's also equally fully registered and regulated by SEC. It is an open-ended collective investment scheme. What this means is that the fund is not tenured. Investors stand the chance to enjoy free entry and exit to the fund without charges after the initial 90 days lock-in period towards retail and institutional investors who are looking forward to stay in for an extended period. And the objective of the fund is to optimize low-risk investment securities in the markets while maintaining portfolio diversification and competitive return.
Okay.
Now you may ask, how can one invest into the fund? Actually, the unit price of the fund is currently at 100 naira per unit, and minimum subscription is at 50. You can actually subscribe, minimum subscription is 50 units. What this means is that with as low as 5,000 naira, any investor can actually subscribe to this fund. A very key point is the benchmark against which this fund is promoted is benchmarked against the 3-year federal government of Nigeria bond. Okay, this fund actually have parties that play critical roles to the management and monitoring of the fund. Of course, the fund manager is Norrenberger Investment and Capital Management Limited. We are the fund managers of this fund, and the custodian of the fund remains UBA. They take custody of the fund, making sure that everything we do is in line with SEC guidelines before the fund is being released to us for any activity. The trustees are more like the monitoring team in this whole mix that tries to make sure that everything we do, both in terms of devotion of the fund and liquidations, are in line with SEC guideline. And our party to that is DLM Trust Company Limited. And the solicitor of the fund, it remains the Metropolitan Law Firm. The next slide actually speaks to the major differences between the Norrenberger Turbo Fund and other mutual funds we have. Key difference is in the securities it invests into. The Turbo Fund aims to invest into a mixed portfolio of long-term, medium-term, and short-term securities. Long-term securities like the federal government bond, corporate bonds, and medium-term securities like the money market instrument, treasury bills, and the like, and also cash as well. And like I mentioned before, the investment objective is to keep a stable income generation for investors over the long term. I've spoken to the units of minimum unit of investment. The minimum investment period is the first 90 days of your subscription. That's the lock-in period. After this lock-in period, the investment, you can actually enjoy to absolutely free exits from the fund. And the risk profile moderately conservative. Thank you, Ogechukwu. Over to you.
All right, thank you very much, Ikene, for that insightful response. I'm sure our audience are getting a few points as to what exactly the fund entails. All right, so now that we already know what the fund is, I'm sure there are special attributes to this fund. So this question goes to Todemu. So Todemu, what are the special features to the Norrenberger Turbo Fund? Like I said earlier, we already have other mutual funds running for us. Do they have similar features, or are there special features to this fund, knowing fully well that it's a mutual fixed income fund? So what exactly are the features of the fund?
Okay, thank you, Ogechi, for this question. So really, the Turbo Fund offers you the opportunity, right, to invest in a diversified pool of instruments or fixed income instruments, ranging from the federal government bonds to the corporate bonds, and also the money market instruments. Yes, for the blended portfolio. And then moving on to the next point is the fact that it's professionally managed. So my colleague earlier mentioned the parties to the fund. So Norrenberger Investment and Capital Management Limited are the fund managers to the fund. And then that means that we're regulated by the Securities and Exchange Commission. We have top-notch research team and a robust portfolio management team that is able to take quality investment decisions. For people who can actually stay in the fund for a minimum of 90 days. And if you could see on the screen also, there's something that speaks to the fact that it offers liquidity. So I'm sure you would say, investing in a bond fund, are you going to be able to offer me liquidity? So this fund is structured in such a way that it will offer you liquidity, just send in your request and we're able to process your redemption. But bear in mind that there's a minimum lock-in period to this fund, which is a minimum of 90 days. So if you're going to be redeeming or taking out your funds or accessing your funds within the first 90 days of your investment, you'll be charged a penal fee of 20% on the interest accrued. But if you come or want to have access to your funds after the first 90 days, you won't be charged any penalty because you have stayed the initial investment period. And then something else is the fact that it offers capital appreciation. So there'll be interest or dividend paid to you at some point in time of the fund, usually at the end of the quarter. So you can actually decide to invest the dividends or ask that is paid out to you. So at that point, it has been able to meet every point of your goal, your investment goal. Thank you very much.
All right, thank you to the move for your response. Like I said, I hope our audience are listening and getting tips as to what the fund is. All right, now we know what Turbo Fund is and its features. This question is for Ekene. Ekene, what are the benefits of investing in this fund? Because I know for an investor, I would also want to know what I stand to gain for investing in a fund. What are like Turbo Fund now that we want to launch? What are the benefits to this fund? And in addition, are there requirements or minimum investment amounts an investor can start with? Or are there like targeted audience, or are they targeted amounts, or is this open to anyone? So please, can you speak to that?
Thank you, Oge. Okay, I'm speaking to the benefit of the fund. Actually, first and foremost, one of the very key benefits of this fund is the ease of entry and exit. What this means is that every investor literally has access to the on demand upon request of the fund. You can actually take a whole or part of it whenever you choose to. However, just like we mentioned before, there's actually an initial 90 days lock-in period, which we recommend. It's not mandatory. It's actually a recommendation that investors in this fund should stay out the first 90 days without touching the principal. But even if you request for those funds within that 90 days, of course, it will be paid to you within the minimum of maximum of 5 working days. And also, there's also the portfolio diversification bit, which is also a very, very key benefit of this fund. Like we mentioned before, the fund is devoted to a mixed portfolio of long-term, medium-term, and short-term securities. What this gives the investor is a very good chance of getting a stable return on investment and a competitive return at that as well. And also, it also serves to speaks to the capital preservation bits and appreciation of fund over time because of the competitive return on the investment. Then, like Todim also mentioned before, customers also are entitled to quarterly returns on the investments. So these investments, the return on the investment is paid every calendar quarter. At the end of every calendar quarter, the return on the investment is paid out to investors while the principal runs. And of course, the investor has the chance of opting for a reinvestment or payout of this periodic distribution. Then I've also spoken about the liquidity bits. You can actually access your fund upon request at any point in time. Then speaking to the cost of entry, one of the benefits of the product is that it has a very low cost of entry. What that means is that with as low as 5,000 naira, the price is pegged at 100 naira, and of course this price is projected to increase over time because the projected performance of this fund. So what I will even enjoy customers is to lock in their investment at this time. So as the price of the fund increases with time, of course, there's a chance of capital gain on the investment. However, it is priced at 100 naira per unit right now, and the minimum unit you can buy is 50 units. What that means is that with as low as 5,000 naira, any investor can actually invest into this fund. Thank you, Oge.
All right, thank you very much, Ekene. And I know my audience are listening. So I know with my 5K, I can key into this fund. I don't have to wait until my money is very big to start. Okay, so if you have any questions, you can drop them on the chat box. Like I said, we'll reply to them at the end of the session. All right, moving on. Now we've given or thrown more light to the benefits. So my next question goes to Victor. Victor, what are the underlying assets to this fund? What do we invest the funds in? Because I know our investors, we really want to know exactly what we use their funds for. So please, can you explain to us what are the underlying assets to this fund?
Thank you very much, Oge, for the question. I'm glad to be here and to share my knowledge with the participants of this webinar. Any investment, definitely as investors, you need to know the instruments or assets that your funds are being invested in, so as to know probably how professional what manager or the fund manager is. And I'm going to lay through about 5 different instruments who fall under different asset classes. And first is bonds. If you can check the slide, you'll see the table that shows the assets allocation range for all the investments, all the instruments we invest in. And the primary one there is fixed income securities. Before I move on, I would want to explain what a fixed income security is. As mentioned earlier by Ekene, fixed income securities are instruments where you invest in. You already know the rate of return or the return you get by maturity at the end of the maturity, at the end of the tenure of the instruments. So it's not subject to changes in the market situation, whether you are unsure if you're making 7% or you're making 20%. It's fixed. Once you invest in it, you know what you are getting at the end of it. So the first example here, which is a primary instrument being invested in the Norrenberger Turbo Fund or any typical fixed income fund, is the federal government bond. This federal government bond is a debt instrument. Debt instrument in the sense that you borrow the government an amount of money to carry out projects, probably to construct roads, to expand, to carry out capital projects, usually most of the time. And we invest a minimum of, let's say, 50%. However, another component of the bonds is corporate bond. Corporate bond is very similar to the federal government bond, but this is being issued by corporate bodies, companies, especially blue chip companies, those who think they want to increase their connectivity to other countries or who within, say, Nigeria, and they want you to borrow them. They pay interest on this bond, just like when you borrow your friend, or I wouldn't say you borrow your friend and collect interest. You borrow someone else's funds and you decide to get interest based on that. So the corporate bonds and federal government, when they pay, they are borrowing from you, so they pay back. They pay for bonds every 6 months. So these bonds, this classification of bonds takes a minimum of 70% of your portfolio. So if you invest, let me give an example. You invest the minimum amount, then you invest 1,000 naira. 70% of 1,000 naira is 700 naira. A minimum of 700 naira of your funds is invested in corporate bonds. The reason behind this is because that is what a fixed income fund is all about. Another thing, another set of instruments that have been invested in this fund is the money market instrument. Those who invest in our money market fund are quite familiar with these instruments. First of them is commercial paper. Commercial paper is just like a younger sibling to corporate bonds. They are issued by corporate bodies. However, it's to run short-term requests, short-term working capital requirements. Probably they want to pay staff loans, they want to pay staff or salary or any other thing. It's not for the long term. Commercial papers are for the short term, anything 365 days and below. When you pay back those loans, those are commercial papers. They are also discounted in nature. Discounted in the sense that when you invest in these funds, you invest less than the face value. I wouldn't want to bore you too much with the details, but commercial papers are short term. And before I forget, lest I forget, fixed income instruments, as I mentioned earlier, bonds are longer term. That means they range from 1 year and above. It can be 2 years, 3 years, 4 years, 20 years, 30 years. They are set to mature. You keep collecting your interest even before that time. So continuing under the money market, you will notice that their fixed deposits also are one of the instruments being invested as well as treasury bills, which are very similar to commercial papers, but they are issued by the government. They are also issued by the government, as I mentioned, and they're also discounted in terms of the way commercial papers are. I wouldn't classify cash as an instrument, or cash is required for us to meet your liquidity and redemption requests as clients, and we don't want to default on that. So though you don't need to care much about what I'm about to say, but we as fund managers also make sure we don't invest more than 30% of your funds in any particular company. This is actually the stress of we, the portfolio of fund managers, when we invest that. This is to minimize the risk, or they minimize our exposure to these kind of firms in case they decide to default or anything. But you don't have to worry about that. We have the proper risk management team in order to focus on that issue. Other money market instruments shouldn't invest more than 20%. So majorly, to sum it up, these are the requirements or the instruments we invest in Norrenberger Turbo Fund in. Thank you, Ogechi.
Yeah, thank you very much, Victor. That was a very comprehensive response, and you did justice into breaking down the technical terms to simple terms that anyone listening can understand. Thank you very much once again. So right now we'll be moving on to the next questions. Okay, and this goes to Ekene. So Ekene, what are the restrictions or eligibility criteria so anyone who wants to invest in this fund? And are there avenues to subscription? What are the platforms they can access the funds, or how can they in general key into this fund?
Okay, thank you very much. Let me talk about the eligibility criteria first. We've mentioned before that this fund is actually open to all levels of investors who are intend to leave fund for the longer term. On the slide there, you can see retail investors. We're talking about high net individuals and the regular retail investors. We're also open to institutional investors, government agencies, corporate organizations, cooperative, clubs, churches, societies. We're open to all of those. And also, of course, partnerships can open, law firms can actually invest into this fund. The minimum you can invest, again, is a minimum of 5,000 naira, which is pegged at 500 naira per unit for minimum of 50 units. So to invest into this fund, we actually have an online form which will be pinned to the chat box, where you can actually fill the online form. Also, you can also go to our website at www.norrenberger.com, and you'll see our subscription form. You can also send us a DM through our social media platforms at Norrenberger. That's our LinkedIn page, our IG page, our Twitter page, and our team of experts will be on hand to midwife your account opening. Thank you very much.
Okay, thank you, Ekene. I can see that it's really a retail fund. Anyone can access it. I'm going to bring my church money, and I know other audience really have plans of bringing their funds here. Thank you very much. And so, like Ekene rightly said, our platforms were at our name at norrenberger.com on all our platforms. So you can always send a DM and we'll be glad to respond to you. All right, now that we know that this fund is open to anybody, and I'm also know that there are risks associated to the fund, and every investor really wants to know that, oh, my money is safe, and what are the risks associated to this fund? Are they like minimal, or are they high, or are they low? So Victor, please, can you speak to the risk associated to the Turbo Fund?
All right, thank you very much for this question. It's pertinent, important for investors to know the risk that they are susceptible to whenever they invest their funds. And I'm going to do a number of them, but I'm going to speak to the two major ones. To let you know that Norrenberger has the necessary skills and staff to make sure that these risks are minimized. This risk range from prepayment rates, liquidity rates, credit risk, and interest rate risk. But I'll focus more on the credit risk and the interest rate risk. What is the credit risk? Credit risk is, in layman's terms, is when you decide to borrow someone your money, to lend someone your money, someone borrows your money. There is a sense or a probability that that individual or firm or anybody would not pay back, or even if they pay back at a later date than you expected. So even though you pay them, it's not certain that you're going to get your funds immediately. So what this credit risk is also similar to our own. These corporate bodies, as I mentioned earlier, corporate firms who issue corporate bonds or those who issue commercial papers, there's a sense that a number of them may not be able to pay back when due. And what we as Norrenberger do is we have highly talented, or let's say skillful risk managers as well as investment managers who take a look at these companies, their financials, check their credit ratings to make sure that they have enough cash flow to pay back, they have enough assets in order to spend off and pay back the loans. And these are several things we have to check to make sure that this risk is minimized. We don't want to invest in a firm that we won't get back your funds from. So I'm very sure I can say we as Norrenberger, I can't recall any PRO falling into the hands of a defaulter because of the risk management team we have. They're quite skillful at the job and they know how to minimize this risk. Another thing is when talking about this credit risk, we also follow credit rating agencies in terms of sectioning these companies into different sectors as investment grade and non-investment grade. So we make sure we invest our funds in investment grade companies, and these companies are being rated by either Augusto. These credit rating companies are Augusto, Datapo, GCR. All these companies make sure that we know companies are those that can pay back easily and those that can pay back easily. I hope you understand what I'm saying. So another risk I know that can be faced is interest rate risk. Interest rate risk is what I will explain further later on when I'm talking about the attractiveness of the fixed income market right now, is the activities of the CBN when they decide to increase the interest rate at a particular point in time. It tends to reduce the value of bonds already held. So we as researchers, we have a qualified research team to look into that and to create expectations about the future, about the activities of the CBN or any regulatory body, and see if it is a good time for us to exit these bonds and go into a better yielding bonds before they become in a state that can be liquidated again. I wouldn't want to bore you too much with that, but just for you to know that there are risks. It's non-negotiable, it's inevitable, but Norrenberger minimizes it to the barest minimum. Thank you very much, Oluchi.
Thank you, Victor. You sound so much like a lecturer, and the good thing about it is that you try to break it down to every level of person listening, and I'm sure they are all listening and picking a few points or necessary information they would need before going ahead to subscribe with us here at Norrenberger. Thank you once again. Okay, so now that we are gradually coming and bringing points that are necessary to know about the fund. It brings me to my next question. And then this question goes to Todemo. What are the timeline before an investor can see interest on their funds? I mean, nobody wants to keep their money somewhere and there's nothing coming to or adding to it, because that's the most important thing for any investor. How long does it take before they start seeing interest on these funds, or is it a daily basis, or what is the timeline put in place for the interest to start coming in?
Okay, thank you very much, Ogechi, for this question again. So I would say interest and returns are called dividends in mutual funds. So this means your interest accrued is going to be paid out to you at the end of every quarter, every calendar quarter month. So we have 4 quarters in a year, and your dividends will be paid out to you, say about the first working week of the next quarter. So on that end, right, you have 2 options. Dividends are basically processed based on client's mandate. So at the point of registration, you'll be required to indicate what your mandate would. Do you want us to pay out dividend to your designated account, or would you want us to reinvest it? Which means, do you want us to add it to your existing investment? So if you're going to be going for the payout mandate, that means we will transfer your interest accrued from the day you invested up until the quarter, as in being that it's a minimum holding period of 90 days, right? So if, for example, you start your investment on the 1st of September, right, which is in between a quarter, that means your fund would have accrued interest from the 1st of September up until September 30th. So the interest accrued will then be transferred to your designated account. And then if you started from beginning of the quarter, that's fine. Your interest accrues on a daily basis. It will be calculated, and then you also be paid out appropriately. But if you indicate that, if you indicated that you wanted to reinvest your dividend, so that means your interest accrued is then added to your initial principal, and then it then becomes your new principal, which then speaks to the fact that it offers capital appreciation. So that means your fund, if, for example, you started with the 5,000, your interest accrued has been added to the 5,000. So that means your new principal is now 5,000 plus your interest, and then it accrues interest again over the next quarter. So I thank you very much for that. I think that has spoken to your question. Thank you.
All right, Todemo, thank you very much. And that's actually interesting to know that my 5,000 naira at the end of a quarter will not be 5,000 naira anymore. So this means that everyone now can start bringing out their money to invest in this fund after this session. All right, so that brings us to the next question, and this is a very important question because I know our investors will be curious to know, when I invest or when I bring my money for this fund, how accessible is it for me to liquidate my funds? Is it a case of when I bring my money, I cannot access my money again, or what are the strategies put in place for liquidation of funds, and how accessible it is if they need their funds? Can you please speak to that?
Thank you, Oge, for that question. Okay, so I'm sure a recurring theme throughout this presentation has been the free exit and free entry bits of the benefit of this product. Investors on this product actually enjoy the rare benefit of actually opting out of the product at any point in time. What that means is that they can request for part or whole of their fund at any time and will pay within 5 working days. Now, here at Norrenberger, we try to make sure we beat this timeline. This is a timeline that has been set by SEC, that all redemption should be paid within not exceeding 5 days, but we try as much as possible to exceed this to pay within well below this timeline, maximum of say 48 hours or 2 working days. We try to beat this timeline. But just to answer your question, investors have that ability to opt out of the fund, either in whole or parts, at any point in time, and we are poised to pay their funds upon request. Again, I will still also want to emphasize on the lock-in period. There's a lock-in period for the first 90 days of buying into the fund. It's actually an ideal period for the investor to stay and get maximum return on the investment. That's if he doesn't touch or liquidate from the fund. That's not to say that the customer doesn't have access to the fund within this time period. The customer has absolute access to the fund within the 90 days and thereafter. However, if he or she touches the fund or the principal terminates either part or whole of it within the first 90 days, there is a 20% surcharge on the interest. But after the first 90 days, the customer enjoys free exit and entry, absolutely free thereafter. Thank you.
Okay, thank you, Kenny. Now that it has been put out there that your money is not locked up with us, I'm sure you are convinced now to invest with us. Okay, well, we're gradually coming to the end of the session, so please do well to engage us, and you can drop your questions on the chat box, and we'll take them immediately at this session. All right, so I have a question of Victor. So Victor, I think we've spoken at length to what the turbo fund is, the features, and to every other aspect relating to the turbo fund. But I'm sure my audience wants to know, why is turbo fund attractive now? Why have Norrenberger decided to key into this fund? And like I said earlier, we already have 3 other mutual funds, but this turbo fixed income fund is to be the 4th fund, mutual fund Norrenberger has. So what exactly is attractive about the fund, and why are we part of the people investing in it?
Thank you very much, Okechi. You called me a lecturer the other time. Let me switch back to the lecture mode again, as I'll be going through some technicalities. So I'll make it in simpler terms. First, you see the tables, the charts we have on the slide, the one on the left and the one on the right. And I will explain it and let you know what they mean and what the trend shows. Last year, 2022, around middle to early to middle 2022, the CBN started its decided to continue increasing the interest rate, the monetary policy rate, according to the Monetary Policy Committee. And this was as a result of their fight against the inflation that we currently have in the country. And because of that, that has effect on the fixed income market, because when you invest in a bond that was already an issue at that point in time, a bond that was already sitting at that time, given the particular coupon rate you get, when they increase the interest rate, the value of the bond reduces. So when the value reduces, people will tend to move away from it in order to buy or go into money market funds or into other bonds that were issued by the government at that point in time or any period of time after that. So why would people want to stay in that particular area when you know it's already losing value? So you decide to liquidate your funds and keep it in money market instruments. Money market instruments that can mature in 30 days, in 60 days, in 90 days, so that when it matures, you know, okay, I can invest in high yielding bonds. So that's the reason why on the left, that shows that the fixed income funds reduced from at a high of 423 billion to present values of 299 billion. Does that mean fixed income funds are bad, right? I wouldn't say so. I will explain to you the reason why this isn't the same. So the current industry size is about 299 billion fixed income funds. Then we have 29 players within the fixed income fund. So Norrenberger Turbo Fund gaining an entrance in the market to make the number 30th position, 30th individual coming in. And the share of the fixed income fund in the total mutual fund industry is about 14.75%. That varies from month to month, but it's around that levels. So one thing I want to explain is, as I mentioned earlier, when yields are high or when people tend to move away from fixed income or bond funds, they tend to go to other funds. Because they want to move away, they decide to increase the attractiveness by the yield increasing, offering the higher yield. When they offer this higher yield, that means they want to quickly liquidate those bonds they have in order to raise funds for what they want to do. And because of that, they will have to increase the attractiveness of that bond. When you increase the attractiveness, whoever wants to buy that bond is enjoying the high level of attractiveness, whether or not the person disposing the bond is making a loss or making a gain by selling that bond. So right now, yield or returns as made it, or the attractiveness of satisfaction. I'm using this framework so it's easier for you to understand what I'm saying. The attractiveness is very high, and if it's not in its peak level right now, it's almost in its peak. And the best time for any investor or individual to gain entrance into this kind of market is to lock it in at this high yielding period, at this high return period, where you can gain utmost and high satisfaction from it. Prices are low. Whenever you want to buy an instrument to buy a product in the market, you make sure you increase, you buy at a level where prices are low. That is similar to a point where yields are high within the fixed income market. So in simpler terms, in lay terms, I think you understand what I mean there. So the justification behind the launch of the Norrenberger Turbo Fund or fixed income, as you may call it, is in order to make and take advantage of this economic and market phenomenon. It's a period of time, it's a phase into growth. So just buy it at this period of time where prices are low, and that is when yields are high. And even when the market goes back down, you're already locked in that satisfaction, that yield, and that return you're supposed to get. So moving on to other things, thinking of current realities, we decided, the investment management team decided to come and bring in different instruments and yield they offer right now. And we just decided to run a simulation just to see what, after we launch today, where do we think the yield of the fund will land? And I wouldn't say to my surprise, as investors, we all know it's going to provide competitive returns. But to you as a newbie to the market, sorry for using that word as newbies, but I would love to show you how that looks like. When you compare when you bring all these instruments together and you see them, you get a weighted average yield. Don't forget, this is a simulation. It's not cast on stone. It changes, it's flexible, it can go up and down, but this should be the average level it's going to be on a daily basis. So the weighted average yield is meant to be around 15.03%. Then the expenses, when we consider management fees, we consider custody fees, we consider the trustee fees and any other fees, even the fees of launching the fund, shouldn't take more than 2% in the yield. The net yield you should go home with as an individual, as an investor, should be around 13%, 13.03%. So we wouldn't stick to just one particular year. We're going to provide a range. And that is why we said the projected yield should be between 13% to 13.5%, 50 basis points difference. But don't forget, this yield is simulated. It can have a different outcome at the end of it due to market volatility. But that is the work of Norrenberger. We, as fund managers and portfolio managers, we always make sure that this yield stays as high as possible. It's quite evident in our other mutual funds, the money market fund, the Islamic fund, the dollar fund. We've always been providing our investors with competitive returns on their investments, and it's quite evident within the market. So all these instruments also, as I indicated here, shows that we are also in line with the asset allocation as directed by the Securities and Exchange Commission, as well as our trustees. I mentioned earlier that we shouldn't invest anything less than 70% in fixed income securities. And you can see there is about 74.30%. Money market securities should be between 10% and 25%. We're investing in that, and the cash also shouldn't exceed 5%, and we are also investing about 1%. So this just shows a picture of how it's going to look like when we officially launch today and it goes after today. And lastly, I want to show us a comparison and to see how the fixed income fund performs very well and provides competitive returns. When you look at the bar charts on the left, on the far left, you will see that the average fixed income fund provides 7.44%. That was as of last week, and we ran the average return on all the fixed income funds on the market, and it was at 7.44%. When you check the average money market fund, it's around 9.26%. All the mutual funds in the industry, when you had it and look for the average, it's about 9.26%. When you check the NGX ASI is the equities market, Nigerian Exchange Group. The equities, the 5-year annualized return, that's for the last 5 years since 2018. When you calculate all the returns in the year and kind of look for an average of it, it gave an average of 12.57% per annum. And looking at the simulated yield for the Turbo Fund, what we expect it to be in the coming days, it should be around 13 to 13.5%. As I mentioned, it's not static. And this shows it provides competitive returns compared to these other instruments, these other markets. And we look at the benchmark also. I'm very sure we recall very well when Ekene was explaining the benchmark for Norrenberger Turbo Fund. The Norrenberger Turbo Fund's benchmark is a 3-year federal government bond. That means from today, which is the year we belong to, 2023, when you calculate 3 years from today, that's 2024, 2025, 2026. The federal government bond of 2026, the yield it has to offer is 13.20%. And when you compare that to the yield, the simulated yield, you see we are if not the same, we are performing better than the benchmark. We supersede the benchmark. So that shows that Norrenberger Turbo Fund, we have so much high optimism about it. And this is the time I think you can lock into this particular investment. So I think I've done justice to that. This is a perfect time before market starts to reverse. Make sure you lock in your funds into a fixed income fund. Thank you very much. Back to you, Ogechi.
Thank you very much, Victor. Like I said, you actually make me feel like I'm in school. If I was to be jotting down these things, I'm sure my book is full because I had a lot of points to jot down. So I think it's safe to call you Professor Victor because that's how you make the technical terms sounds very easy. So thank you very much, Professor. All right, so we've come to the end of the session, but before we go, we'll quickly take questions from our audience. All right, so the first question is from Emmanuel. So Emmanuel asks, as an existing customer, as an existing customer of money market already, do I still bring KYC documents or can I just send funds to you into my account? So Todemo, you spoke to the subscription, so I'm sure you can enlighten him more.
All right, thank you, Ogechi, for this question. So because you already have an existing account with us, we might not necessarily need your KYC, right? We might just need to do some updates because obviously probably your ID might have expired or your proof of utility bill has to be more like up to date. So we would most likely request for those documents. But the thing is, you also just need to send us an instruction to tell us that you want to invest, you want us to open a Turbo Fund account for you, and then we would proceed with that. Thank you. I hope I've been able to answer your question. Thank you.
All right, I hope Emmanuel is still listening, and I believe that he has gotten the response to his questions. Okay, the other question is from Ayomide. Ayomide asked a question, and I believe this question is directed at Victor. Does the fund provide a higher return than the money market, or is it around 11%? Victor, please speak to that. Or Professor,
Okay.
please speak to that.
All right. Thank you very much. Well, I wouldn't say in true terms it provides a 100% higher return. It changes, market changes every single time, right? It's not static. There are some times when the money market can provide way better than a fixed income fund. Currently, think of the US economy right now, where yields on shorter instruments are even above what 20-year bonds are offering, right? The market, that's like an inverted yield curve. An inverted yield curve in the sense that when shorter instruments provide better returns than the longer ones. So the market changes at any point in time. But on a normal yield curve, a fixed income fund, right, where you invest in short and long term, a longer yielding instrument should provide a higher return because of the risk of holding it for a longer time. So right now, the market in Nigeria shows that long-term interest rates, that's the 2053 bonds, offer significantly higher. I think the market opened at 16 point something yesterday or even today. So when you compare that to what a short-term instrument we offer, though the treasury bill closed, the 365 days treasury bill closed at 13%, there are sometimes it may intersect each other, but a normal way it should be is longer term. If you still come back to equilibrium, longer term should be offering higher returns compared to a shorter term instrument. I think I have done justice to that.
All right, thank you, Victor. Thank you, Professor. Apologies for addressing you with that your title. All right, there's another question, and it's also centered around the yield or the rate, and it's from Alex. Alex asks, I'm curious, when the presenter said dividend payout is at the end of every quarter, at what rate? He was asking if it's at 5% or 10% of the amount invested, and is it paid at the end of the quarter? So this question actually goes to both Victor and Todemu. So Victor, I think you should speak to the rates aspect of it, and Todemu, you speak to the timeline.
Okay, I didn't get much, but let me explain what I know. Dividends, or paid dividends on the Norrenberger Turbo Fund, it's just like the normal traditional mutual fund we have, the money market fund, the Islamic fund, or the dollar fund. It's just like accrues. The rate is per annum. Don't get it wrong. The rate is per annum. But what is that? Every single day it changes. You prorate it to per day. Whenever it changes, if it's 12% today, you get the 12% per annum and get for 1 day out of that 12, then put it that has already added to your amount of money. If it increases to 13, it's good for you. If it increases to 14, it's good for you. So when you accrue all those interest over the last 90 days, a quarter is 3 months, which is equivalent to 90 days. When you accrue all those interests over that period of time, the dividend paid out at the end of that quarter over the 90 days is what you are accrued to. The capital is reinvested. And this depends on what you feel in and what you tell your relationship manager. Do you want it to be rolled over alongside your capital, or you want to liquidate your interest? That's your dividends, as we call it. Normally, we don't call it dividends. We call it distributions because of sometimes and its influences of the equities market. But dividends, as we may call it, are paid 4 times in a year. First quarter, that's at the end of March. Second quarter, at the end of June. Third quarter, at the end of September. And the fourth quarter, at the end of December. So that is it. I think, I don't know if I've done so much justice, but I love Oluwatoyin to continue where I stopped.
Thank you, Prof. Victor. In fact, you've said everything. I really don't know what you want me to say anymore. But the whole idea is rather than leaving your funds idle, right, you're earning something off it. In fact, I would say it's a crime to leave your funds idle. So whatever fund you're investing in, particularly the Turbo Fund at this point, you would earn some form of interest on a daily basis. And at the end of the quarter, usually dividends are paid, I would say, first to second week of the next quarter. And then you're able to plan with your steady income. And then if you want us to reinvest it, we're able to do that. And something else that I forgot to add earlier on was the fact that you would also have login details to view your investments at any point in time. So you're able to monitor what the fluctuation is like on the interest rates. And then you're able to see how much you've accrued so far. Thank you.
All right, thank you, Todemu. So we're taking our last question for the session. All right, David asked, what is the timeline for liquidation and how soon can they get their funds after liquidating? So Ekene, please, can you speak to that?
Okay, thank you for that question. Okay, so the program paper for this product stipulates maximum of 5 working days for us to, from your date of request to the date of payment. However, like we mentioned before, at Norrenberger, we try to beat this timeline by paying a lot earlier. So, of course, we have a redemption form which the customer has to fill. And as soon as we get that redemption form, either you're sending it via email, your registered email to us, or you fill it in our office or via our online platforms. As soon as we get that request, we start actioning it immediately, and we try to beat that timeline again before the 5-day timeline. We'll try to pay every such requests of investors on the fund. Thank you.
Thank you very much, Ekene. Thank you to the Mo and our dear Prof. And this brings us to the end of the session. But before we go, I want to thank my colleagues again and our audience for participating in this fund. We say a very big thank you to you. And please remember that the Top-Up Fund is not just an investment opportunity, it's also a point for you to attain your height, and it's the beginning of your financial prosperity. All right, you can DM us on all our platforms, or you can check www.norrenberger.com for your inquiries, and we'll be delighted to respond to you. Thank you once again for joining in, and enjoy the rest of your day. Bye.
Thank you. Thank you.